Hello everyone. In this video today, we're going to be going through the statement of cash flows basics. So we're going to start off this video and we're basically just going to talk about, what is the statement of cash flows? That's how we're going to start. So just definitionally, the statement of cash flows reports the cash inflows and outflows of a company over a specific period of time. Okay, so similar to the income statement, the statement of cash flows also covers a period of time, right? Okay, and so we need to keep that in mind when we're preparing the statement. Okay, this statement of cash flows, it helps investors determine how a company generates its cash inflows, which are its cash receipts. Okay, what a company's cash outflows are. So like basically, what is it making cash payments on, right? What is it spending its money on? Okay, how is it making its money to a certain extent in terms of cash? And then what is it spending cash on? Okay, and then also the overall change in the cash balance for the year. Okay, so from the statement of cash flows, we can kind of figure out cash inflows, cash outflows, and then overall change and the cash balance for the year. All right, generally, we use information from the balance sheet and the income statement along with other transaction data, okay, to actually solve problems. Okay, so when we'll see these problems for the statement of cash flows, we're generally going to have a lot of data. Some of it's going to be income statement data, some of it's going to be balance sheet data, and then even other data we're going to need to actually solve these problems. Okay. So there's 5 main sections of the statement of cash flows. Now, when I say 5 main sections, generally you'll hear 3, but I'm kind of being a little more comprehensive in my view here, okay? Now, the 3 main ones are the first 3 here, and then we kind of have these other pieces here, but I just call them sections because they are included on the statement, and we do need to know about them, okay? So first we have operating activities, okay? This shows the cash effects of transactions that factor into the determination of net income, okay? Meaning any item that affects net income is going to be shown in the operating activities section of the statement of cash flows, okay? And some examples would be changes in current assets, changes in current liabilities, depreciation and amortization, and then gains and losses on the sales of assets, okay? Those are generally the things that are included within the operating activity section because all these things factor into us getting to net income. Okay, so if a transaction has an impact on net income, it will be shown within the operating activities section. Okay, investing activities show the cash effects of selling or purchasing long-term assets and making and collecting loans. Okay, so some examples here: purchasing or selling equipment, making a loan or collecting the principal of a loan, and then purchasing or selling investments. Okay, so generally things having to do with long-term assets and then making and collecting loans as well. Okay. Now, financing activities show the cash effect of any transaction related to financing the operations of the firm. Okay, so if we're doing things like issuing bonds for cash, issuing stock for cash, paying a dividend, or issuing a notes payable, those are all examples of things that are related to financing the operations of the firm, right? Kind of where are we getting our sources of cash to actually fund our operations, but also, if we're paying out dividends, that's kind of part of financing because you have to pay your investors a certain amount of a return, right? Or else they are not going to continue to invest in you, okay? So these are like sort of the 3 main, if you want to think about it, like the 3 main sections, okay, that you're always going to see on a statement of cash flows, okay? This next one you will see it on a statement of cash flows. It's just sometimes it's not necessarily labeled as a section, okay? But we have this beginning cash to ending cash reconciliation schedule. And a reconciliation schedule, it's a reconciliation schedule that starts with the beginning balance and the cash account and then adds or subtracts a change in cash during the year to arrive at the ending cash balance. So basically, we'll see this in a minute, but basically what this is that you have beginning cash, okay? You add or subtract the change in cash during the year, and then that gives you the ending cash. Okay, it's literally just that simple. That's a reconciliation schedule, okay? It's just you have a beginning point, you add or subtract some numbers, and then you have an ending point, okay? And that's the next section. And then the final section would be significant non-cash investing and financing activities. These are transactions that would be included in the investing or financing activity sections. So either one of these of the statement of cash flows, except for the fact that no cash changes hands. Okay, so what does that mean? Well, let's say we issue a bonds payable for new equipment. Well, in that case, right, we kind of have both financing and investing activities because we have new equipment being purchased, and we also have a bonds payable being issued. However, there's no cash actually exchanging hands in that transaction, right? We're incurring a liability in a bonds payable, and we're getting equipment for that, okay? That's one example. Another one is issuing stock for a building. Again, no cash changing hands. It's still a situation where we're kind of having part financing, part investing, but there's no cash changing hands, so it goes into its own section. A non-monetary exchange, which is basically exchanging a similar asset for a similar asset, meaning we exchange a 5-year-old truck for a 5-year-old truck, okay? Again, no cash changing hands. And then converting bonds into stock, okay? That could be some examples of the significant non-cash investing activity, financing activities. And this is kind of shown in its own section. We'll see in a second how it looks, but this is shown in its own section below everything else, okay? Below all the other sections, okay? So now we have a couple, we want to just go through quickly what are the steps to prepare the statement of cash flows, and then we're just going to look at a quick template of the statement of cash flows to get ourselves familiar with this, how this looks, okay? So the steps to prepare the statement of cash flows, we have to determine the cash flows provided by or used by operating activities. Then we have to determine the cash flows provided or used by investing activities. Then we have to determine the cash flows provided or used by financing activities. We determine the overall change in cash, and then we reconcile the beginning cash balance to the ending cash balance, okay? That's basically the steps that we're going to take when we're doing our statement of cash flows, okay? And so here, and it continues on to the next page, here we have basically sort of a sample statement of cash flows, right? Just a template that you would use for, you guys can refer to this in the future. It's pretty comprehensive, right? In terms of, it includes a lot of different things, okay, that we could potentially see, okay? So first we have our 3-part heading, right? Always 3-part heading. When we make our financial statements, we have the name of the statement, we have the name of the company, the name of the statement, and then for the year ended and the date. Then we want to make sure that when we're having our different sections, we're labeling them. Okay, so we have cash flows from operating activities, cash flows from investing activities, cash flows from financing activities. We're basically breaking them up, right? We want the users of the financial statements to be like, oh, okay, this is operating, this is investing, this is financing, right? We want it to be very clear where the differentiation is, okay? For our class, for operating activities, we always start with net income, okay? And then we have to have this line here that says adjustments to reconcile net income to net cash provided by operating activities. Okay, basically this is just saying, okay, we have net income, we're going to adjust it for certain items, and then we're going to arrive at this net cash provided by or potentially used by operating activities, okay? If the cash is negative, right? If we have negative cash in one of these sections, we would actually write used by here instead of provided by. I just sort of assumed it was provided by, but it could be used by as well, okay? And that's the same for every single section, okay? So the first one, we have things like depreciation, amortization expense, like I kind of talked about. You'd have things like decrease in accounts receivable, increase in inventory, prepaid rent, changes there, changes in accounts payable, changes in unearned revenue, and then gains and losses on sales of equipment or debt investment, stuff like that, okay? All those factor into our net cash provided by operating activities, okay? The specifics of whether we add or subtract we'll go over in another video, but I'm just trying to get everyone familiar with how one of these statements would look just as a template, okay? Just trying to include, a multitude of different items, okay? So we would get net cash provided by operating activities. Then we have our next section, cash flows from investing activities. Then we include, again, any sort of transactions that relate to selling or purchasing long-term assets and then making and collecting loans. So sale of equipment, sale of debt investment would go there. So we would have net cash provided by investing activities in this specific scenario, most likely, okay? And again, if it's used by, you would just have used by sort of in parentheses to a certain extent, okay? And then you don't necessarily have to have it in parentheses, but actually you don't really need to have it in parentheses, never mind. You could just write used by. But, you could potentially have that too if these amounts were negative. Then cash flows for financing activities, again, you just list the ones that fall in that category. So things like purchasing treasury stock, issuing bonds payable, payment of dividends, okay? All those things would actually affect basically the financing activities, okay? Up here, don't worry about if it's add or subtract. I didn't actually, necessarily go through and make sure that every single one of these, if it's an add or it's a subtract, this is just to get you guys familiar with the statement itself, okay? So some of these might be add, some of these might be subtract. I kind of just put a blank across the line, just XX, just to get ourselves familiar with, okay, this is sort of the format of the statement, okay? then the other thing is, then we just total up our cash used or provided by financing activities. Then this is our reconciliation schedule at the bottom here. We have a reconciliation schedule, okay? And this is basically saying, okay, what's the increase or decrease in cash? What's the cash at the beginning of the year and what's the cash at the end of the year? Okay, and you need to actually prepare this, okay? This information, the cash at the beginning of the year is generally just given. The net increase or decrease in cash is just these three numbers added up, okay, for the three sections. And then the cash at the end of the year, you would just do the math, okay? But you need to have this on your financial statement for the statement of cash flows, or else you will lose points on the exam, okay? The last little part is this non-cash investing and financing activities, and so you just list. If you have any, you just list them, okay? So if you issued a bonds payable in exchange for a building or, you know, whatever happened, then you just go ahead and you just list them there, okay? So that's the end of this lesson. We're gonna go through an in-depth problem in the next video, okay? So hopefully that makes sense for just a quick introduction, and that's the end of this topic.